Hello guys, welcome back to another Lumby trading video. In this one we're going to be doing the weekly small cap recap to go through all the trades we've taken this week, what we recently bought and what we've sold for the previous week. So as you can see on screen, we have added that next £110 instalment. The account's currently sitting at £283, so you can see we're still down £11. During the week we did actually get to about break even. I think the account went green for a bit. But that's when we started moving some stocks, selling our winners and selling a few of our winners that were coming into profit targets and starting to increase size in some others. So to start off, we'll go over the ones we sold, Visa being the first one. The reason for this is it's coming into statistical mean on the 4 hour. You can see we sold around 213 because at 216 we have statistical mean, and then we also had the first deviation on the daily at 214. So we're like, okay, we'll just close before we come to the 214, because once we come into there we could start seeing a pullback, so we can get out of there and put the capital in a different trade. Now to be on me, we ended up taking a lot. Oh, actually, I will go through how green we were on these trades. I think on this one we bought, our average was, I don't know, around 195, I believe. So we ended up making roughly a 9% profit on that trade alone. Beyond me, this is one we actually ended up taking a loss on. So we ended up buying this first deviation on both the 4 hour and the daily. Did end up going green. I think we were up around 5% on it. It then ended up reversing, and then we ended up being down 5% again. The reason we sold this was, as you can see by the deviations, they're just in such strong downtrend. So as we didn't get that bounce we originally wanted, it looks like it's going to continue lower. So we're like, I will cut out of this and instead just find one that seems a bit better. Because beyond me, it's just strong downtrend. There's not really much point in trying to get a short-term investment / trade on that. PayPal's the next one. We also closed this one out. Reason for that is we were just quite heavy in financial services. So with PayPal we were, can't remember what our average was, it was somewhere around here. This did end up closing for a green. I think we're up around 4 or 5% on the final bit. As it came into the second deviation on the daily, we ended up just closing it out, mainly just because we wanted to use the money in another trade, and plus we were still in the Visa trade at the time. And I think we were also holding American Express, so we didn't really need the capital in PayPal as well. GPS, which is Gap, reason we sold this was just because it looks like it's going to start reversing back down, and again we didn't really have too much in it, so it just made sense to kind of put it out. It was only like £5 or so, and again just throw it into a different trade, which maybe is a bit more profitable to win. Now Johnson & Johnson, this was a great trade. We ended up closing this out because it came into our final profit target. As you can see, we ended up getting long, I think around 156, 157, so near the bottom of this overall move. Came in statistical mean at 164. Reason we closed the trade out, because once we go into statistical mean we don't really want to be holding it, because then it could really go anyway. So yeah, we ended up closing that trade up about 5%. Now we did cut some size on Roku. This one I'm going over these in the middle because those are all the ones we sold completely. Now we went over 2 trades where we started to cut some size, but we're still in with some size. Roku, we ended up cutting some size. Reason for this was we had that day, I think it was Wednesday or Thursday, where it was up 18% in one day, or closed 18% up in one day. On that day we ended up locking in some profits. Reason for that is when a stock's firstly up that much, you expect a pullback coming in the next few days. Secondly, we also did come into the first deviation on both the 4 hour and daily, so definitely wanted to lock in some profits coming into here, just because obviously we could end up getting pullbacks for that day. So I think we ended up looking at 250, because then you also got the psychological level on that day. And the reason as well we wanted to cut size and not wait fully until statistical mean is, again, with Roku, it's got the downward facing deviations, and that's something we're going to stop doing, I think, in the future, is trading long any of these stocks which are both facing down on both the daily and the 4 hour, just because it reduces our overall chance of success, and so then we have to be red for a lot longer holding these. And it also does mean your profit is basically getting smaller every day, because when deviations are facing down, this statistical mean, which will usually be our final target, will keep also decreasing every day. I mean, when you look at it today, it's at 286. When market opens Monday, it could be down at 285, 284. So that's one of the reasons as well when we don't want to be trading deviations if they're both kind of facing downwards. Last one we cut some size on was ADSK. Reason for that is we were in, it was I think our biggest holder last week. and then we did end up doing a good push to the first deviation on both the 4 hour and the daily. So it made sense to lock in some profits just in case we end up getting a pullback. We don't want to be in with our full size for the pullback, and also as it's done kind of the majority of the move we want it to, now it's only got to go from the first deviation to the statistical mean. It makes sense to kind of pull some money and go into an investment which is down by the second or third deviation, because then we can look for some more upside. So now that's all the trades we've either got out of completely or cut size on. Now we'll go over to the ones we've now in. So SE, now this is our biggest holder at the moment, and this is kind of why the account's down, because this is a trade we were up quite well. We ended up getting long around this 244 mark. You can see we ended up buying some. We were up around 6%, but I think we were only in with 25-30 bucks at that point. So as this kind of just went up, it looked like it was going to continue up, so we just started adding a bit of size as we went, because we wanted to kind of increase size in a few good stocks. And the reason SE was one of these ones that I wanted to increase my size in is by how strong the uptrend is, especially on the 4 hour when looking at the standard deviations. So that is the main reason why we've added to large size on SE, and if it does continue to pull back, we will be getting into more size, especially if it pulls all the way down to 218 or $200. We would definitely be increasing size on SE. So yeah, then onto City. This again, we weren't holding any of this last week. We ended up getting in quite big size today. We're currently in with around 44-45 pounds. Reason for this is we can see it's come back to, well, we didn't buy any of the first deviation. Reason for that is it wasn't really on our radar. It's when all the stocks were pulling back, so we didn't really have a need to buy City then. There were better opportunities which were down by the second or third deviation. But now looking at it, a lot of the stocks have started to bounce. City has not yet done that bounce, and it's a better low risk option than the majority of the banking stocks as of right now. So as City came into the second deviation on both the 4 hour and the daily, we added in some decent size. Now we're not looking to get long any more size until it kind of comes down to this $56 mark. So if it does continue down another $3-4, that is where we will be looking to add more size, but we will be looking to add size if it does come that low. And now you may be thinking, okay, but the deviation on the 4 hour is heading down. Yes, that is true, and it's why we were added. And if you can see by the orders, we did add more size when we came into this first deviation, the second deviation on the daily, because that is our upward sloping deviation. But we will also add some size on the 4 hour just because the deviations are so close together. So it still makes sense to be adding some size. But yeah, for the time being, as the daily deviations are still facing up, it's a stock we're happy to invest in. And this also has, obviously, City is one of the bigger banks out there, so it's a safer investment overall compared to something like Roku, which is a lot more growth based. So it's a lot more hype, and if their earnings go bad, obviously it will pull back a lot more than something like City. So City is just a safer investment, so we can take that extra risk even though the 4 hour deviations are heading downwards. Now Docusign, another one, this is now our third biggest. We're in with around £30. Reason for this trade is we can see it did this massive, absolutely massive gap down. And this was still on positive earnings. It's not like they took a loss this season or anything like that. It was just that I think they were doing 60% growth every quarter, and this was the first quarter they weren't able to do 60%. So as it is a growth stock, that did end up making it pull back, but it does seem to be a bit of an overreaction. It's also down by the third deviation, so something we're getting long now. We will definitely be locking in some profits coming into the second deviations just in case it decides to continue down, and we would have a stop on it around where we got in, so around break even. But we would expect it to continue up from here. Our main target of around 190 to around 200. We'll probably be locking in around 1/3 to 2/3 of our position, and then the rest of it will try and hold to kind of that gap fill area of around 230. SDC, we don't think we added in any more size into it this week. This one is one of the stocks, we kind of said it before, is we didn't really buy in the deviation. As you can see, the deviations are so far away, but it is one of these stocks. It's high risk but also high reward, and that's why you'll see it is one we are down 18%. But the reason we can afford to take that much risk on this is our upside target. you're able to see from the pattern with SDC for the last 52 weeks is it gaps down, tends to sell off for a bit, and then comes back to retrace this. And that's really the same play we're trying to take on SDC right now. We have the kind of final target of around 523. You can see I think our average is around 350, so we can see that is quite far off from where we are. Actually, well, that would be down then 24%, so our average is a bit better, maybe 325, roughly around that then. Yeah, so our average is around 325. And as we can see, upside for that then is 60%. So that's why we can afford to take that extra risk, because we would expect it to come back to this 523 level. Now onto Autodesk. This is another kind of big holding on the account, £25. It's around 10% of the account, or a bit under that. Held in Autodesk, and we can see with this again, we went over the reason why we ended up cutting some size. We were in with around 35 pounds of it, but as it came into the first deviation, we wanted to lock some profits in. But again, we do expect it to push more towards that statistical mean, so we'll be locking in the majority, or we will be closing this size or this whole trade at around 295. Facebook, another trade we're in, up currently around 2%. We ended up getting long around this 310 mark. Didn't quite push down to that average in zone, which would have made it that nice trade and what we were really looking for. But you can see we ended up acting that bit earlier at the psychological $300 level. Since then, it's obviously continued up the market, and overall we're looking to lock in profits. We're really probably not going to scale out of this one. We'll probably just lock it in as a whole, coming into kind of that 345 area, so kind of slash 350. Disney, we haven't added any more size into this one recently, but we may do if it does end up pulling back, kind of this pulling back, we will. And this one kind of does go a bit against plan. As you know, we said we weren't going to trade things where the deviations are heading down, but on something like a Disney, we are happy to kind of still take this trade. It may mean we use less size because the deviations are sloping down, but on a value stock such as, and I guess it's kind of considered both a value and kind of a growth stock, but on a stock such as Disney, we would consider it blue chip. We can kind of buy it a bit more when the deviations are heading downwards. But on this, we are going to lock in, really just close the trade around 160. So if it keeps going up to 160, we'll close out the trade. If it pulls back, we'll buy more. Roku, we're still in with £20 on this trade. Not something we're going to buy any more of. If it kind of breaks the low, we will probably just close it out, because we would rather just put the capital elsewhere. But otherwise, we're looking still for around 280 to lock in the remainder of the position. DKNG, this we're still in at £20. We're not going to average any more size into this one. Again, deviation sloping down, considered more of a growth stock. If it kind of breaks a low, again, we'll probably close it out. Otherwise, we're looking for a target of around $40 to $42. ASML, believed to be open this up this week. Again, it just came into the first deviation on both the 4-hour and the daily. We're about break even on this trade as of now. We ended up grabbing it a bit late. But yeah, again, our target for this is around 845, 850. So if we're at break even now, around 780, we do have quite a good upside of around 10% to go on this trade. So yeah, that's when we're looking to get some size, and the deviations are very strongly sloping upwards, which is something we love to see. American Express, again, we got long here obviously in the original pullback. We are very near kind of to where we would look to close the trade out completely. We're already up around 5% on this trade, or a bit over 5%, and we're looking for it to move, say, an extra 5% upwards. When it comes into around 174, 173, that's when we'll be closing out AXP, which is American Express. Now that's all the trades that we have there. The ones below those are the ones we went over, on ones that we either cut size on or closed completely. So I hope you enjoyed the small account challenge. Hopefully from next week we will probably be back into the green, because now, as long as SE and City are going to be those main ones, we would expect City to get a bounce this week. Same with SE, we would kind of expect it to push up from here. So next week we would expect it to be more of a green day recap. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.